This is going to be arguably one of the best videos that I've ever put together for traders because it's going to be short, it's going to be to the point, and we're going to talk about what are the basic principles of trading that if you follow, you will make money. You will make money, you will be profitable. Forget the indicators, forget arbitrage, forget bots, forget all of it. How do you make a lot of money trading? That's what I want to talk about in this video. So let's cut straight to it and roll in trade. Now, first of all, why should you even listen to me in this video? Like, why should you? And straight up, I'm going to say, well, you shouldn't. I don't trade for a living. You should follow other traders, which is what I do. I study other traders. I study what they do. I study what works. I study the mathematics, and I build tools for traders. And I've been able to boil down the principles of trading into just three categories. Three things that if you do, without a shadow of a doubt, you're going to make money in the markets, whether it's in crypto, whether it's in the stock market, in any market. And I even want to talk about a trading strategy right here that if I was to go into trading full time, if I was to forget all the money I make from business and I was to go into trading full time, the strategy that I would deploy. So it's super cool. I can't wait to talk about it. You're going to get some insights right now from me in terms of what do other traders do to make money? How are they always so profitable? How do they go from 20K to 7 figures within 2 years of trading? What are the principles that they follow? That's what we're going to talk about here. So it's really, really interesting. Now let's talk about the top 3 most important things that you need to pay attention to if you're a retail trader and you want to make a lot of money trading. The 3 things are as follows: probability, risk versus reward, and psychology. So probability, number 1, this is not actually the most important thing, in my opinion. The risk to reward is actually the most important factor, and I'm going to prove that to you mathematically in this video. But obviously, the more successful trades you place, the count of the more successful trades you place is going to have a dramatic impact as to how fast you grow your bankroll, how fast you grow your bank balance. So that is extraordinarily important. The second thing is risk to reward. People get confused. They're like, when do I get in? When do I get out? You know, they go into a trade based on whatever algorithms or analysis or whatever they've been told, etc. But even though they feel good about going into the trade, they have no idea what their target is, how they're going to manage their money, how they're going to get out. Well, I've studied and followed the people that do this extremely well, and it's actually really simple. So we're going to talk about that. And number three is psychology. Psychology is very important to know when to get in. This is like absolutely fundamental. Psychology is very important, but let me tell you something. If you get these 2 things right, you're not going to have to worry about this one. But you need this in order to get these 2 things right, if that makes sense. Anyhow, let's not just look at words on screens. Let's actually talk about this with real life scenarios. So if I go over here to this calculator, you're going to see I've got a calculator on the left over here. So I've got the trade profitability calculator. And I'm going to assume that I start with, say, a bank balance of $5,000, 5,000 monkeys, 5,000 bananas, whatever it is you want to trade in. And I'm going to now assume that I make certain wins and losses in trading. So let's assume that my first, 1, 2, 3, 4, 5, 6 trades are a loss. And my last 4 trades are a win. So let's just assume that. That means that I have a win-loss ratio of 40%. So I've got 10 trades in total, 4 of them are wins. That's a 40% win ratio. So I'm wrong 60% of the time. However, let's assume on every trade I'm risking 5% of my trade to make 20% back. So 5% of my total capital in order to make 20% of my total capital. So I have a very, very good risk to reward ratio here. So if I do that, if I start with $5,000 within 10 trades, knowing, by the way, because you can see my balance is going down here. By the time I get to trade number 6, I'm at $3,600. And in the mathematics of trading, it's much harder to grow your capital to get back to the position that you were when your capital's lower, because you've got less leverage. Money is leverage. If your capital goes down, it's harder to recover. That's why in trading, they teach you to protect your capital. That didn't make sense. Replay that. That's really important. There's whole videos on YouTube just talking about that point. So that's how to think about that. So down here, my balance is low. Now I've got to recover. It's even harder. And it only takes 4 wins and I make $2,600 profit. Now, why is that? My win-loss ratio is bad. It's less than 50%. A monkey throwing darts at a chart statistically would have done better than me. But because of my risk to reward ratio, I have still come out on top. We're going to talk about how do we find opportunities where we can get even much better risk to reward ratios than I'm showing here. But let's flip this around. Let's say that I've got more wins than losses. Let's say I've got 3 losses at first, and then, so 70% of the time I'm winning. But my risk ratio is 20% and my reward ratio is 5%. Let's see what that gives me. That gives me a loss of $1,400. Can you see the difference? Can you see how with probability, now my probability is higher, but because my risk to reward ratio is crap, I'm losing money. Do you see what I mean? So this is it's really cool, right? It's really interesting. So let's put this back to 5% to 20%. And now if I've got a 70% win ratio, I'm making 10,000 in profit. I've more than doubled my capital. So now in total, I've got 15K in capital. I've added 10 grand to the bank. Can you see the power in this? Let's just assume 50-50. Let's say I start with a loss, and you can see I'm trying to be negative here, right? I'm being negative. I'm not like, this is the power. This is how you need to think. Understand the principles and get away from the noise of trading. Just get the principles right. Win-loss ratio 50-50. I make 4,600 in profit. My bankroll goes from 5K to 9,600 within 10 trades. So probability and risk to reward. Now, let's talk about how do you as a retail trader, so you're not an investment bank, you don't have a huge bankroll, you're someone who loves trading, you're interested in trading, and you want to make money. Okay, so you know this. So you know that the probability, your win-loss ratio needs to be good, and you need a good risk to reward ratio, and that's all great. But now you're like, okay, Sean, well, how do I do that? Now, one of the most successful stories that I've been following is Stephen Dux's on YouTube. You should definitely check him out, by the way. Stephen Dux is, in my opinion, absolutely the real deal. And of course, some of his YouTube videos are going to be, promoted in the typical way. But his style and methodology of trading makes complete sense. And I see a massive opportunity to definitely apply this to crypto. By the way, number one, Stephen Dux has no idea I am promoting him in this video. I'm talking about him because it cuts through all the noise. The other thing is trading is hard. Like, this is hard. This is where it gets difficult. So the fundamentals, number one, you need to get right. What are the fundamentals of the cryptos or the stocks? Well, how do we do that very quickly? Let me shortcut this for you. You're going to love this. If you don't love this, then I've done something wrong. But I think you're going to love this. Let's shortcut all the fundamentals. Why don't we just look for cryptos that are crap? Okay, good. Most of them are. Perfect. That's great. So now we have an entire list of cryptos we can trade. They're crap. There's no real business. There's no real value behind them. They're crap. Okay, so the fundamentals are poor. It's the same as trading penny stocks. 99% of penny stocks are crap. So you already know in the pool of these cryptos or these penny stocks, whatever you're trading in, you already now know the direction you want to trade. You want to trade based on the fact that these are going to go down. You want to short. So this is the mentality you're going in with. I know this is a crap coin, so I want to short it. But you can't just go around shorting cryptos. You're going to lose your house. Like, you're going to lose everything. So we need to be very, very careful here. We need to find out, well, what's the strategy? So what's the signal? And for me, it's as straightforward as this. The signal is, if a crap company is going parabolic, like it's going up, like it's skyrocketing, and it's a crap company, and I know there's no substance behind it, there's no support, there's no reason why that company should go up in value. I know that. then I know what goes up must come down. It's only a question of when. So fundamentally, you know, this is crap, this is hype, this is a pump and dump. Like, you know, whether it's a pump and dump, whether it's some hype, whatever it is, you know, this is a crap company, or it's not even a company. And this is why I think this is going to be so cool for crypto. You know, this should go down. So this is super cool. The signal is something's going parabolic. That's the signal. That's the scan you want to do to find your opportunity. And when I built the first tool on Crypto Wizards for scanning crypto price movements, this is exactly why I was doing it. I was looking for things that are moving fast in price. What is going parabolic that needs to go onto my watch list? So when I built that tool, that's what I was looking for. And so the signal is, okay, these are going up. So what you want to do is watch them. Now you need to bring in the psychology. What's happening with volume? What's happening with price? And this is where the learning experience comes in. You need to understand, what is the market thinking? What are people thinking now? When are they going to realize, oops, price isn't going up anymore. Oh, I have effed up. I've messed up here and I'm going to lose all my money. You want to short before that happens. Now, why am I talking about this? So we've got the psychology right, which, by the way, I think I've spelled psychology totally wrong. Let's just move past that point. My spelling is terrible. It's fine. It's okay. It's about trading, not spelling. But so I've got the psychology right. I've got the signal right. I've got the fundamentals. Everything we've spoken about here is real basic, right? Now you're like, okay, well, what about risk to reward? Like, how do I know now? I want to get in. I've got the psychology right. I know. Here's like a perfect example. Here's where a price is going parabolic. Look here, like it's a piece of crap company. Price goes parabolic. You're not trying to catch this. Like, you can't predict this really, unless you have a sophisticated algorithm, which I'm actually looking into building if you watched my last video. But you can't really catch this, but you can catch this. So now price has gone down and it's going up again. But you know, most of the hype and the pump has already happened. Now, as price goes up here and it hits your risk to reward ratio, because you know what's going to happen with this price. I mean, you look at this chart right now. Let's pretend in fact, you know what? Let's draw this. This is really going to hit it home for you. Let's just draw this annoying square and chuck it over here. So price has just done this. And you're watching the price. Now you're getting nervous because you're like, oh, do I short this? Or do I go long? You don't know. You don't know this is what happens yet. You don't know. But long term, what's going to happen? Yeah, it's going to go down, right? It's going to go down because you know it's a piece of crap company. In fact, it's not even a company at all. So you know the price is going to go down eventually. But you're like, when do I get in? Well, if you've got your psychology right, if you're looking at the volume and the trades, and this is where you need to learn and develop skill. Okay, that is where you need to develop the skill. What are the patterns? What are the behaviors? What have previous pump and dumps looked like? What is the pattern that occurs? Right? So you get good at reading that. But let's assume you get it wrong 70% of the time. We've already looked at it. Let's say you're right only 30% of the time. Well, your stop loss is up here at the top of this bar because you're betting that it's not going to go past that previous high. So that's your stop loss. The current price is over here. So your risk, let me draw this on here. This is your risk. Let's just draw a little arrow here. This is your risk over here. In fact, I'm a perfectionist when it comes to design, by the way. I have to make this look a little bit better. So here's the reward, right? So look at this risk to reward. Like, are you with me here? Are you getting this? Are you following? So you're going to short here. Like, you're going to make money if things go down. Your stop loss is here. If you do this right with a stop loss, your risk is very low. If you're trying to be a cowboy and you're getting emotional about your money and you're not being mathematical, that's how you lose a lot of money. So I just want to, like, in what I'm saying here, I just want to protect that. I want to make sure that you feel that. And so when you go in and do something like this, you're being smart about your trade. So that's your reward. Now, let's say you're wrong. Well, you can be wrong 70% of the time and you're still going to make money. Remember our example earlier? Loss, 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 loss. Win, win, win. Hang on. Loss. Remember what we looked at earlier? Here, I'm still profitable. And all my losses, all my trades to begin with were losses. I'm being super pessimistic here. I'm still profitable. So you can be wrong 70% of the time. Well, what's the likelihood you're going to be wrong 70% of the time? Well, that's not likely because this is a piece of crap company. It's already hit its high. So when I look at Stephen Duck's doing this, his average probability of winning is like 68%. In fact, it's going up every year because he's getting more skilled at reading the market, at writing rules, at learning what doesn't work, at documenting that. Like it's a journey. But this guy took 27 grand in dollars and turned it into millions of dollars within 3 years. How did he do that? He was shorting penny stocks because they're crap businesses. And look at crypto. How many crap businesses are there in crypto? So for me, this is like a huge opportunity. Now the barrier here is, okay, well, what cryptos can you short? You know, how many of them go parabolic? By the way, in a bear market like this, anything that goes parabolic, it's a no-brainer, right? So this is what happens. This is what happens. It goes up again a bit, but it slows down. It runs out of steam. Look, it's going up on less volume. I know this is a casebook example and not all of them are going to look like this, but here we go. We've spoken about this in all our trading videos. This is going up on lower volume. It's running out of steam. There's a divergence. You've got this fantastic, like the more it's going up closer to this point, the more I would be shorting. I would just be placing more trades because I'm like, great, a better deal, a better deal, a better deal. Like, you know, and here we go. Then you're shorting, bang. And now you're making, I don't even want to calculate this, 0.120 down to 0.040, let's assume. I don't even know what that is percentage-wise, but that's a hell of a great gain in one trade. So this is how I really recommend to think about your trading here. If you're a retail trader, if you don't want to do the arbitrage side, all of that kind of stuff, you don't want to just be following prices and trying to predict them. Look for events, get the fundamentals right. Okay, fundamentally, I want crap companies to short. Great. Get the signal right. Cool. This price is going parabolic. Get your psychology right. Okay, I can see that this is coming to a little bit of a crash now. In fact, the price is showing that as well. And get your risk to reward right. Make sure that you put that stop loss in. I hope you found this video really useful. I was very excited to make it for you. If you have any questions, definitely hit them up in the comments. And until the next one, take care and talk soon.